you see happening in the market, investor side, startup side? How are things looking going into the winter? What do we need to do to protect cash flow, to meet targets? What are the sort of like couple of trends and a couple of suggested actions? So Luigi, why don't you give us an intro there?
Well, in this moment, the most important thing for companies is to stay healthy first and alive. If they don't manage to stay healthy. And I think what I can see from the investor's perspective is that we are living like in a moment in which we have like extreme conditions. So we are thinking also a little bit more radical. I think we are thinking more, should this company thrive and maybe survive, or should this company just be let go? Because there are so many companies that are probably, on the wrong side of the coin, on the wrong side of the sectors that will grow in the future. I'm thinking of co-working spaces, transportation companies. There are a lot of these companies that probably will not be able to survive even in the long run. So I think that investors are a little bit more having a kind of a binary thinking. Should I keep investing? Should I let it go? And then of course you have the other sectors, of which I believe we will be talking in a second, which probably are thriving thanks to COVID, in which of course investors have quite a bullish approach in terms of investing. But for those that are struggling a little bit at this moment, I believe you see a more binary approach of investors.
Peter, what's your take on this?
As Luigi said, there are sectors where it would be wrong to keep businesses alive, and the ones he mentioned there were service sectors. So if you take it in terms of IP generation and deeper tech and everything, the problem with a company failing is that you lose intellectual property, you lose the team structure, you lose knowledge, you perhaps lose a number of things which may be of benefit in the future. There's no doubt that whatever new normal we're ending in will have less of certain things around, whether it's transportation, etc. But there are two elements here. There's the welfare of the human race, the people and feeding themselves and their mental health and everything, and keeping those people in a safe state. And then there's the companies themselves. Obviously, in our capitalist society, it's the companies that employ primarily. Certainly in the UK, it's the civil service is much less than half the number of employees, probably only a third. So you've got to protect those, but whether you protect those within the structures of companies or outside is a thing that governments are having to decide. So yeah, letting companies will go, there's no doubt about it. Making decisions about which companies to go is really difficult because it's being done from above by government, it's being done by consumers, obviously, by not consuming, but it's also being done by us as investors, because any company that's not got to break even or has been reduced below break even because of COVID is being supported by somebody somewhere to pay their salaries, whether that's through a government funded scheme of some sort, or whether it's debt, which is unlikely, or whether it's equity. And angels, of course, provide the equity. And the angels don't believe that this business has got a future. They'll stop providing equity. And then, in principle, the company has nowhere to go except failure. Quite depressing, really, because it's not an easy solution from any direction to make a decision about these.
And another small comment I would say, Goran, is also that the investment grade of a lot of our investments have gone to a grade which is like a normal equity investment grade or loan investment grade to speculative grade, because companies need money so much that I've seen in our valuations, even in, I would say, med tech, which you may think, okay, it's close to health, but if it's not close to COVID, some of the med tech company, even, they're really suffering. And so you also see an approach which is quite speculative in the market, which is probably not extremely healthy because it will not give, the enough, let's say, resources for the company, as I said, to stay healthy, but maybe just to survive. And then if they're just only surviving, the question is, how long, can they keep surviving, and how long speculative investment can really make it such that, this is good for companies?
Yeah, and we're coping, thank you, Luigi, and we're coping with that in the UK, and I'm sure other countries with so-called convertible loans. So what you're doing is putting equity in where you don't decide, you kick down into the future the decision about what it was worth. It means that in time, in a year or 2 years, we're going to get some extremely high down rounds if any more equity is available.
Yeah.
So it's so difficult. That's why investing in new businesses is so difficult at the moment, because we don't know what the future looks like, and therefore we don't know how to price it.
Yeah.
And do you guys think that going forward, of course, there are the obvious things, like you would say, one of the largest acquisitions over the summer was the purchase of a company producing hygiene products and personal protection equipment, things of that nature. But these are the obvious ones. So what's less obvious going forward? The businesses that are sort of aligned with this trend, but will keep going even after the pandemic is done.
You want to go first, Peter?
Yeah, I will do. So, yeah, I mean, again, obvious really is the concept of stuff being done online. Totally obvious, isn't it? Because if you're not going to stop the spread of COVID and whatever happens next, you have to have people in not so close together. Therefore, the delivery of items, whether they're even Amazon, you've seen the Amazon growth and share price, the fact that many people are buying online, they wouldn't dream of bought online before, and they suddenly find it's working, whether it's food or whatever. And then, of course, you've got the online delivery of content, whether it's a medical diagnosis or it's educational program. And this is democratizing a huge amount of, this is the thing that the developing world, the global south, as it's called, has been wanting for years. We can suddenly do that and people are accepting that. So again, this is pretty obvious that these things are going to benefit from COVID, but those are the ones that we, as early stage investors, are clearly moving towards at the moment, based on the fact that we have, as a society, accepted things that we haven't before. Psychotherapy counselling, you wouldn't believe that could be delivered online, because psychotherapists, counsellors expect the body motions and movements and all the other subtle signs are essential. It turns out they're not as essential as they thought.
Adding to the sector that Peter mentioned, of course, I believe that even investments in climate, what they call also climate tech, lots of investments. I think also, what is related to mobility. I think people have become aware of the needlessness probably of traveling so much. I mean, I was a guy traveling at least 3-4 times a month, taking a plane and flying, all over Europe. And now I'm not. I took one travel in the last 6 months, and it was to go back home. So you can see that people are forced to think, is it really so necessary? And then of course you start learning more about all the consumptions and all of that, and you can see how this is. If you watch the American presidential debate. All about this, carbon emissions and Amazon forest, 100 trillion investment, 50 billion investment. I mean, people are really questioning very hard this type of thing. So definitely, I think that climate technologies, mobility technologies, will become a very strong focus on investment. And another massive sector in terms of remote working and the remote things that you can do. It's also education. I mean, we have seen educational technologies really also, we've been talking about online universities, for a long time, but I think the UK is a little bit of an exception because the Open University was already quite strong. But in other countries in Europe, that was really not, very much happening. And now everyone is delivering, university courses online, masters online. You're forced to, and you can see that you can do it. So you're actually doing it. So I think that, people have really been forced to think how important it is to be able to handle these technologies. I mean, my 85-year-old mother, forced me to buy her a professional smartphone, and I had to spend many hours teaching her how to actually use it. And now she's completely familiar with WhatsApp, Instagram, Facebook, and she didn't know any of this. She was just calling people and saying, "Are you coming for lunch?" And that's it. And now, it's amazing how quickly she got adapted, because technology has become so easy to use even for, you know, people that old. So yeah, massive changes, and I think really massive opportunities there.
Perfect. And do you think, I'll end with this, this is just maybe your take on it. Do you think we need more mechanisms for sort of regional cross-border funding, or even putting startups or young companies into multiple markets early on versus them having to go through every country one by one, which is expensive and slow? Do we need more of such initiatives to really tie together these regions, or are we good and we just need to make better use of what we have?
Yeah, I'll start with that. So yeah, we have a big problem here, I think. Something that's very difficult to solve, which is the concept of there being a common market in all sense of the word. The difference about the Americas, of course, they speak the same language and use the same currency. They have basically the same taxation system. We don't have that in Europe. I mean, the startups I'm involved with, I invested in over 70 of them. It's rare that they approach Europe as a market early on. They approach either the Far East or America, because although America is very difficult to get into, it's more difficult to get into Europe. So the psyche changes. I mean, what people buy in Sicily compared with you know, Finland, and the way the consumer mind works is very different. So actually getting trade across does need more, not regulation as such, but more motivation somehow centrally. Cross-border investing, you know, EBAN and BAE are both working on this, and Luigi's firm is. For instance, we're helping, and I think probably BAE is as well, with a cross-Mediterranean investment structure, the Med Angels, so the money coming from the north to the south. I mean, that's quite good because they've got something in common, which is the Mediterranean got similar, and to some extent, mindsets, etc. But getting money, say, from the UK, where there's, you know, probably half of all the early stage investment is done, into Slovenia, which I've been to a few times, it's not easy, because you need to invest. I know Branko well, and I would use him as a trusted intermediary if I was going to invest in Slovenia. But you've got to build up that trust with people, I think, because in the end, very early stage investing is investing in people, and you need to know the people, get to know the people before you invest. And you can't get to know people across border. I mean, you know, glass screens help a little bit, more Zoom, but at the same time, there has to be some face to face. So the only way, really, for me personally, to invest in Slovenia is to go through somebody I trust who's already investing and use them. So they're the deal lead, and I put the money in. So creating more of these contacts. The big issue, of course, at the moment with COVID, and we've got lots of events that I'm supposed to be going to in the next few months, is that trust for human beings still seems to be required mostly by having face-to-face, by having a drink together or pizza together or a chat together. And that has very broken. And just to give an example of what's Cambridge Angels here, I've been chair of that in Cambridge. We invested over 50 million euros last year as an angel group. We haven't invested in anything new now for 6 months. We've looked at probably 70 deals, and nothing that wasn't already known before lockdown has been invested in. This is because of this business of building trust up with entrepreneurs. So that's just in this community here. Imagine what it's like when you've got a 2-hour Ryanair flight away and you can't take it. This is a big issue, and I'm not quite sure how this will be, but this does need to be driven by a number of us, our trade bodies, your Angel Group, etc. in Slovenia. So yeah, we have a big hill to climb to get this trust built up over Zoom and Teams.
The add to that is that there is now quite a clear evidence that at the level of startups, we do have a lot already, you know, locally, and that of course, if we have personal networks that are very smooth and very easy to activate, we can get also, you know, investments across border from people from another country. But it's just because, you know, exactly, we know them. We've been already maybe investing with each other. We trust each other. But I don't think there is such a strong need. Even a small country as Slovenia with 2 million inhabitants, you have all the measures for startups, loans, co-investment with angels, this and that. I think now this part, I would say, of the financial chain is already there. Of course, you know, certain countries need more private investors. I can still see how certain countries are struggling to get more private angels and private market into the private investors into the market. But that will come hopefully with peer-to-peer learning and experience and understanding, you know, how this is not, you know, a rocket science. In my personal experience, the group that I co-founded, Italian Angels for Growth, was co-founded because 40 of us traveled 3 times for, you know, a week every time across the pond, and we were taken by the American ambassador in Italy to the US. We saw all the kinds of ecosystem possible. We were very disappointed when we saw the East Coast and the West Coast, because we thought this was too far from us. But then when we went to the Midwest and we saw some like normal cities to our standards, then we said, okay, you know, if we're not able to do as good as Milwaukee, then we should just give up. And this is how 9 of us started Italian Angels for Growth. And today we are over 200 people. It's top 3 early stage investors in the country, and it was just started by 9 people. So I believe that when it comes to growing the market and cross-border at startup level is much more providing capacity building, networking, peer-to-peer experience, exchange experience. You don't need much more of that. When it comes to scale up, so when it comes to go abroad, then I think it's a completely different ball game. And this is where Europe is losing because of its fragmentation. And so if you ask me, should there be more cross-border initiatives at that level? I would tell you, yes. I think that the European Innovation Council is a very good step in the right direction, but I think that 10 billion euro over 7 years, it's a drop in the ocean. So there has to be the possibility for really, you know, scaling up and having investors from all over the countries without having to worry about, I have to set up 27 or 28, if we include the UK, limited companies in order to, you know, to scale up. If I want to set up, you know, an office in Belgium and I want to scale up in Belgium, being Italian, I will have to go and you know, set up a limited company because I have to hire people according to the Belgian legislation and this and that, and it's a complete mess. I mean, for a startup and a scale up, you cannot handle all this complexity. So we are advocating very strongly as BAE, and I think for EBAN is the same. You know, we want to have a single market for, you know, the European scale-ups, because if we don't, I mean, we need to have a kind of a safe haven with much simpler rules. So it has to be probably more cross-border in that sense, going back to your question, but especially it has to be easier, much easier for a startup that wants to scale up to not have all these kind of, you know, red lines, because otherwise we will never be competitive with, you know, big markets like the US or China, and we will keep seeing companies trying to go there simply because they are entrepreneurs and simply because this is the biggest opportunity, where the biggest opportunity is.